Hey guys, so I want to bring you guys some news that you may have missed this week as well as today to prepare for next week, and some stocks that I want you guys to watch and keep on your radar. Okay, so one of the things that I do want to mention before we get into our official news is that Booking Holdings will be doing a 25-for-1 stock split. Now, on today, the stock closed out at $4,250. Okay, now they're estimating that when the stock split happens, that the stock will be around $160. But of course, we know that 25-for-1 split, the actual amount comes with the closing price that it closes at prior to that stock split. So that amount can really change. Now, I did make a video where I talked about stocks that you can catch up to a $200 move on, and Booking Holdings was one of those companies. Now, let me say this. Because I know a lot of you all who are watching are either new to trading, you're just getting your feet wet, you're probably not risking a whole lot. Booking Holdings is not a newbie trade. It is not a newbie trade. It is not one for a small account. I do not day trade this thing or trade it often at all because they have some massive spreads, and I always make sure that part of my game plan is to have enough time to let Booking do its thing. Now, if you watched other videos where I talk a lot about the delta, where I'm pretty much explaining to you how that plays a huge role in your trade, you'll know I've said all the time that I do not trade with anything less than a 50-cent delta, and it usually too can depend on the stock that I'm trading. Tesla, Booking Holdings, Eli Lilly, among a few other them, are those that I don't mind going too far out of the money. Now, Booking Holdings, I went way on about the money, okay, because those premiums are extensive. Now, the last time I traded it, I had a 20-cent delta, but the way that it moved, that nice move that thing made, you wouldn't have even thought that I had a 20-cent delta. But if I had got something in the money or deep in the money, that would have been a amazing trade. It was amazing in general, but hey, that would have been crazy. But I do not risk, and I try not to risk more than 50% of my account. And because those premiums were so extensive, y'all, I had no choice but to go out. But I was confident in the move. Now, I do have partial shares in Booking Holdings. I don't have a full share. So when that stock split happens, it's going to look a little bit different on my end. But nevertheless, I'm prepared for that, okay? Now, if you're not familiar with Booking Holdings, also, they are the parent company of Priceline, Kayak, Booking.com, where you book your hotels, your travel, and all of that, okay? So I just wanted to throw that out there in case you have not seen that previous video I did, and pretty much, let you guys know, hey, we got a stock split on our hand. Now, before we get into the news, another thing that I want you guys to understand, because we saw this with Netflix, just because a company is $4,000, $1,000, $2,000, $4,000, it does not mean that when the stock split happened that there's going to be this massive surge in demand. It don't always work that way. It's the same thing with Netflix. Netflix stock split left it at $111, and it still came down. The demand will kick in, but it doesn't come in instantly to where you just hop in and you say, oh, this thing is going to surge back to those thousands. Let me go ahead and get in. Listen, it's absolutely okay to invest in it when it gives you a stock split, but don't go in thinking that it's going to be this massive surge and it's just going to go back up straight away. It does not work like that, and allow Netflix to be that prime example. Investing is a long game, and so when stock splits happen, it's just another process of entering another long game to allow the stock to find its footing, find its fair value, and then begin to make its way back over time. Keep in mind, Booking Holdings did not become a $4,000 stock overnight. Now, let's come over here and let's get into this news. Okay, so this right here is as of today. Netflix has dropped out of the wars or the bidding war to purchase Warner Bros. Now, we were super confident that they were going to walk away owning Discovery Bros. Okay, if you know Discovery Bros, you know that they have a massive portfolio, and in turning over this portfolio to Netflix, it will put Netflix, literally at the top of proprietary assets that they will own in this streaming space. But unfortunately, I'm not even going to say unfortunately, because when I talked about this at first, okay, Netflix had those earnings. They had the stock split, they had earnings. Netflix took a very, very nice tumble. And a part of that tumble came from the fact that Netflix took on $40 billion in debt to aid in their acquisition of Warner Bros. And so when you're adding on debt, you're adding on to your liabilities, investors like, okay, all right, now I understand you guys are acquiring such a massive player in the streaming space, but you're adding on a lot of debt and you're also spending out a lot for this acquisition. And so that played a huge part in the price coming down, okay? Hit down to what, $77, $76 from that 80 area that I have been watching. And if you are in my trading community, you'll know that one of the trade plans I uploaded, I'm like, hey, we're getting back to this little area around that 80. This is going to be a nice place. It breaks below it, it's going to come lower. It holds firmly, we can push higher, and it definitely broke lower, okay? Because they were mounting debts on to take on Warner Bros. So even though it seemed exciting, the short-term landscape of this thing wasn't too exciting, and it kind of brought us down. I'm currently in 2027 leaps for Netflix, okay? My drawdown was about 37, 38% on Netflix, and that nice little run up that they had today, of course, brought my leap back. So thanks, buddies. Like, I'm not really tripping about this here because we know that this acquisition played a huge part in why the stock was down. And so now they've recovered. Post market, they're sitting at about $91, $92 at the time of doing this video. So that's going to look really good tomorrow. But I have no plans of touching my leap right now. Of course, that doesn't expire to January 2027. I'm planning on riding this thing out, playing the long game, taking profits on this thing every few weeks, and then just kind of letting them run. Okay. So that's the biggest thing right now with Netflix. They came and said, y'all got it. Paramount offered $111 billion. Now, they have been crazy persistent in trying to get Warner Bros. Now, Warner Bros. Initially didn't even want to sell. If you saw the video when I first talked about this, they didn't want to sell to Paramount and they didn't want to sell to Comcast. But hey, they came with an offer that they just could not resist. And here we are. Okay. It says Netflix says it has declined to raise its offer for Warner Bros. After the Warner Bros. Discovery Board determined that Paramount has submitted a superior offer for the media giant. The deal is no longer financially attractive, so we are declining to match the Paramount Skydance bid, the streamer says, suddenly ending a corporate tug of war. And also, Netflix was buying on some of Warner Bros. Debt as well, so that was another thing that kind of shook investors with this deal. The announcement means that Paramount has suddenly moved much closer to taking over CNN and the rest of the assets owned by Warner Bros. Discovery, or WBD for short. Okay, not only will Larry Ellison have his hands in CNN, okay, he will have his hands in, and you know what, I just want to say this, and I want to put this out there to Paramount. Do not mess up Game of Thrones, okay? But let's get back to the article, okay? The regulatory review process will still take several months at a minimum, but barring any further surprise, Paramount CEO David Ellison will assemble a sprawling entertainment and news empire with dozens of TV channels, multiple movie studios, and two leading newsrooms. Okay, so initially with this whole acquisition too, they were looking at Netflix, the whole monopoly thing, because with Netflix acquiring Warner Bros., it was really going to put them at the hands of, just like it said, leading newsroom, massive entertainment empire here. We know everything that is under Warner Bros. And it's extensive, okay? And so I'm curious to see how this is going to continue to go. Now that it's Larry Ellison, on the other hand, as well as David Ellison, I'm curious to see how this is going to go and how these monopoly talks progress, okay? Because that was a big one that they were kind of looking at too, but hey, we shall see. So Netflix is backed out of the deal. They are no longer interested in taking on Warner Bros., and that's where we are. And so with that, that resulted in Netflix being up $91, $92 in post-market after the market closed. So we can definitely revisit that on tomorrow to see what it's looking like and just how this news has a very nice impact on the stock. So Who are we watching here? We're watching Netflix, we're watching Warner Bros., and we are watching P-Sky. That is Paramount Skydance, okay? So these are three stocks that I want you to keep on your radar, of course, from this particular news for either direction, okay? We're likely going to see a gap on Netflix come Friday from that post-market move, just depending on how it opens up in that pre-market and when the market opens in the morning. So pay attention to any gaps there. And don't understand what the gap is. Just when the price shoots up, skips a whole bunch of price action, and gaps are likely to get filled sometime, or they're kind of factored into moves. The price comes down, refill the gap before it makes another move up. Okay, so for those of you who may be new to this option trading thing, okay, so those are the three to watch from that news. Now, let's get over here to the next piece of news that I want you guys to keep on your radar. This one is Trump administration moves to nix Biden era rule on independent contractors. Now, when this whole thing first came into play, if you were watching the market or you were trading, you'll know that Lyft, Instacart, and Uber were among three that took a nice little hit from this news, where it makes it harder for companies to classify individuals as independent contract. What this is going to do is, with Trump pushing this thing out, it is going to make it much easier to classify people as an independent contractor, also lowering costs for companies such as Uber, Lyft, Instacart, and Amazon could to see some impact from this, okay? And if you don't know why Amazon, if you're familiar with Amazon Flex, if you order something from Amazon and your package arrives in a Toyota Corolla, yeah, that right there is from someone being an independent contractor of Amazon to deliver. Okay, that's all that is. I had my package delivered in a U-Haul once, and I mean, very highly confused. It wasn't until later that I knew that Amazon had Amazon Flex. I thought everything came from Amazon. So I see a lot of people still talk about that, trying to figure out why people are popping up in regular cars and thinking people stealing their packages. No, ask questions before you go outside doing too much. It's just an Amazon Flex drive. Let's get to the article, okay? So, President Donald Trump, President Donald Trump's administration on Thursday moved to scrape a rule long opposed by business groups for making it harder to classify workers as independent contractors rather than employees who can cost a company more. So nicking this thing out will definitely result in companies having to pay out a little bit more, pretty much lowering their costs in this thing, okay? The U.S. Department of Labor released a proposal to repeal the 2024 rule, which it said was legally flawed and had deprived many workers of the flexibility that comes with independent contracting. Come on down. The rule, which the department stopped enforcing after Trump took office last year, requires a company to treat workers as employees under federal wage laws when they are economically dependent on the company for work. Okay. The proposal would replace the rule with a standard favored by business groups that focuses on how much control companies have over workers. Trucking, retail sales among industries to benefit. Okay, so that right there is going to result in Lyft, Instacart, Uber. You may even can watch UPS as well. UPS and FedEx. Keep your eyes over there as well. Now their delivery with that end of like allowing independent people to deliver is a little bit on a smaller end versus where you have Uber, Lyft, Instacart, and even Amazon Flex. Okay, so still additional to watch outside of the ones that I'm going to show you guys. Okay, so what we're going to do is we're going to come over here to the chart, and I want to look at Lyft. Now, the reason I want to look at Lyft first really quickly is because Lyft was among one of those ones that I have a trade plan for in my trading community, and I have been talking about in those Sunday night reviews and those pre-market lives, because Lyft got back to a very, very nice level. Now, it had some overkill and came on down to about $12.94. But overall, it's been holding firmly at that 13.16 that I said, hey, we need to watch this area. And so we had that overkill over here. We did push back up. It pushed back down again. And we are seeing that it's kind of holding up there since Monday. Okay, so still watching this area. I'm currently in a long-term trade for Lyft. Okay, I'm in a what is it? It expires. I got one for March and I have one for April. So definitely going to be something to continue to keep our eyes on. Let's bring this down some. I'm going to show you guys something here with this gap. We have a little bit of a gap here. It's not a massive gap. Lyft does not make massive moves. So this is why it's super important to have time on your side with Lyft, because the moves are not extensive, okay? Enough time, give Lyft time to do its thing and make a nice run up. I'm on this daily time frame. The RSI is sitting at about 38, indicating that it's a bit oversold right now. So I'm looking to see how they get this gap filled. We're getting back above and we're going a little bit higher. Okay. Now let's come over here to this news piece right here. The Trump administration plans to repeal a rule that made classifying workers as independent contractors harder, which could lower Lyft's operational costs related to its contractor workforce. Okay. So Lyft, among Uber, and Instacart are the three from this particular news that I want you guys to keep on your radar. Okay, longest Lyft is holding above, especially around that 12.94, but that 13.16, then I am looking to see that this thing push a little bit higher. The important thing is just having time on your trade. Okay, so let's really quickly look at Uber. And let's come down. Now, Uber has really been one of those ones I have been watching, because I initially spotted this cup and handle here on Uber. Now, I'm on a daily time frame, and you notice why I have these three circles here at that area around 69.22. What I was looking to see is that they held up there. And if you guys notice, let's take all of this off. Okay, now this here was just me drawing out the handle to see how this thing kind of plays out. But I was watching to see that they held up at the 69.22 area. And as you can see, it did come down, slight overkill down here at about 69.02. Not too bad. And it made a nice push up. So now it's starting to kind of breach that upper resistance that I had up there at around 75.40. It pushed up, but it did not quite hold. So getting over that 75.40, I'm looking to see that this thing can push higher and holding. I have a target of about 82.08 and higher on Uber. Okay, so that's currently what I'm looking at right now and what I want you guys to watch. Breaking below that 69.22, I had a longer term target of about $60.76. Of course, with some middle ground there, okay? I wasn't expecting to just go from 69 straight to 60. Have some targets in the middle and make sure you accommodate that with the way the stock move on a day-to-day basis. And as of right now, RSI is sitting at about 47. So once it really does break and hold over that 50, that mid ground on that RSI, then I am definitely looking to see that it will break 75. So keep that area on your radar at that 75 for a break or some rejection to give you a short-term landscape on which way that this thing can go, short-term and long-term. That's all that I have for you guys on today. Keep Uber, keep Lyft, keep Instacart and Amazon on your radar from this most recent independent contractor news. Keep Warner Bros., Netflix, and P-Sky on your radar from Netflix backing out of that deal. And keep Booking Holdings on your radar for their upcoming stock split. I hope you guys can find some opportunity in these particular stocks and in these trades on those charts, okay? And with that, I will see you guys in the next one.